Hey everyone, welcome. It is 1 o'clock on February 29th. We just got the closing bell this morning. We were sharing how it was going to be difficult for us to move down. Like we had a upward bias that came in after those reports in the morning, and then we were saying how it'd be difficult for us to have a down day, but it would also be difficult for us to break above that 510 level, which was the psychological resistance. And during the day, we'll take a look at this. We have this indecision bar right here, a nice doji candle, and we did go up and test that 510 level, but we backed off. So let's see how that happened intraday. That was really, really interesting. We had a huge downward bar right at the last minute because up until the minute before, it was looking very, very positive. Actually, we were the minute before we closed, we were at the high of the day, and it was looking like we had a strong movement upwards during the last hour. But suddenly, we got this huge down bar right at the very last minute. That's really, really interesting. So it's going to be very pertinent and very interesting to watch how this market trades overnight and how we open up in the morning. So that this is pretty unusual to have this large of a bar through the day, through at the very last minute. So let's take a look. This range right here was $1.63, 1.63 points on the S&P 500 on a single bar. That is crazy. So let's see how large the next largest bar was. It was only 50 cents. So we had 3 times larger of a bar just in that last minute. That usually indicates really, really strong downward movement, really negative sentiment. So basically there is some traders or some institution that's just waiting and just hiding out until the very last minute to show its hands. So it'll be interesting to see what kind of dark pool prints we get and what kind of action we get overnight. And let's see on the day, that volume might actually reach a little bit closer to the moving average today. So we haven't seen anything like that in a really long time, for just to have sellers come in at the very last minute. But in any case, if we look at this, if we ignore that a little bit and we just look at this on the day, we did stay above that EMA 8. That EMA 8 did hold. We traded down to test it. We traded up to test the 510 psychological resistance, and then we ended up right where we opened. So choppy, sideways, indecisive. We had that last minute selling off, and then that's right. Maybe we'll test that EMA 8 again. So basically, all of that just to say we need to wait another day to see what's going to happen. We would have been a lot more positive if that last minute selling didn't happen, but now we're right back in the same boat we were before. Now it's just sideways chop. We're still above the EMA 8. We're above the EMA 20. This uptrend is intact, but over the 1, 2, 3, 4, 5, 6 bars now, so a little over a week, all we've done is chop sideways. And our viewpoint that, hey, it's a little bit more likely that we're just going to chop sideways until we're finally forced to make a decision either up or down, that is really starting to play itself out. So what we want to see is, are there any market stimuluses coming up that are known? And if not, what could possibly cause a break in either to the upside or a downside? So let's see what we can find out, what's going on. Let's see for tomorrow in the earnings reports. Nothing. And then next week, very little. So earnings are basically not going to be a factor at this point. We've got Broadcom and Costco and Target next week, Ross Store. So some retailers, Kroger, but really them by themselves aren't really going to dictate where the market is going to go. Broadcom will be a little bit bigger in terms of tech, but yeah, the market isn't going to hinge on Broadcom or Costco or Target, especially since it's more of the tech sector that's going to be in focus. So really we only have Broadcom there. It's not, for example, an NVIDIA. It's not excuse me, it's not going to be able to dictate where markets are going to go even for a day. So no stimulus coming in from there. Fed watch tool, we've already know what to expect, so there shouldn't be much to be priced in. So we've got about a 22% chance of a rate cut in May. So what we want to see is if we start getting clues from the Fed, any of the Fed speakers, any reports that come out, where there's starting to talk about cutting rates in the later half of the year or in the fall, in the winter, anything that might indicate to us that we will not start cutting in June, but maybe we'll start cutting after June. That would be some information that would not be welcomed by the markets and could help move this market downwards. TLT came up, touched that upper part of the channel right here. We're not really expecting it to break out above it. Even if it does, we have the MA200 right there. So not a lot of room for the TLT to move upwards. And that's the same with our major indices right here. Not a lot of room to the upside, psychological resistance right there. If we keep getting this sideways chop, then what's going to develop is consolidation zone, and we will be looking for signs of distribution, meaning that market makers are emptying out their warehouses, emptying out their inventories, and at some point they'll run out. And then this market will start to be guided and manipulated downwards so that they can replenish their inventories. So, I'm sorry, they can replenish their cash. Okay, they sell off their inventory, and so they can replenish their cash. And then once that's done, after we sell off, then they would be replenishing their inventories. So let's take it at QQQ. QQQ, very similar. Okay, we did come up and touch those highs, but we backed off and we ended up higher. We did test that EMA 8. So looking very, very similar, same story with the Dow Jones. So all of our major indices are in confluence. Let's see what happened let's take a look at VIX. VIX started up higher, traded back down. It probably didn't have enough time to react to that 1 minute bar that was very large. So we're probably not going to see that reflected until tomorrow morning. And then so let's take a look at our sectors. Let's see what our sectors are doing. And just really for the day is what we care about. So tech still ahead, but the basic materials, that's one of the ones that I had my eye on yesterday. We talked about basic materials, we talked a little bit about industrials, we talked about healthcare, we talked about financials, but I was wary of it because of potential problems in the banking sector. And there was one more we talked about, I think it was staples. So materials is doing very well and it's up here with technology, but this week so far has been a very technology centric week and we've been flip flopping. So if we flip back to defensive sectors next week, XLB could still be it's not 100% defensive, but it is more towards the defensive side than the speculative side. So XLB could be an excellent choice to look for some longs in here. Let's take a quick look at that. XLB, yeah, very, very comfortably making new highs, and it's been continuing to make new highs. So unlike the major indices that made a all-time high right here, then pulled back and then got stalled out and then just challenged the all-time high today, but then pulled back from it. Well, yesterday, we made another all-time high in the XLB, and today another all-time high. So this is much stronger than the market is at this point. So let's see what the constituents are of XLB. And I probably already grabbed this. Okay, so let's go ahead and let's go into our stock fetcher. And we are going to look at the individual components of XLB. All right, so there's a decent number of stocks in this. And if we go from on a longer term basis from the best performers to worst performers, wouldn't really do anything with LIN. That huge gap up is not really, it's skewing everything. So we wouldn't really be paying attention to that. And then we've got WRK, Rushrock. Very, very nice uptrend, but deviating from that EMA 8 a little. MLM, parabolic. Very nice curve right there. Parabolic curve. So we might be waiting for a pullback before ECL. Very nice and steady, moving along the EMA 8. But it does look a little overdone. CE is looking a little bit better following that EMA 8 and EMA 20 and MA 50 all together. This is a little bit of a consolidation right here. So what we would want to see is a definitive movement of, right now it's a little hard to tell if this is accumulation or distribution. If it's distribution, it really should have been up here, not right here. So it's not quite low enough for us to be entirely sure that's accumulation, but it does look a little bit more like accumulation than distribution to me. And so this would be really interesting. If we see this breakout, CE would be a really great candidate. So this one, moving along is EMA 8, Avery Dennison. That is actually looking very good. So one of these, so a great idea would be to find one that's very strong, that's performing very well, that we don't necessarily expect or need to have a pullback before we're comfortable going in. So I would say Ecolab or CE. We could go long one of those two. And I would just maybe prefer Ecolab a little bit over CE because CE we were waiting for a breakout. So let's just say Ecolab. Let's open up our options analysis, options strat. If I go long call on ECL. Nope, ECL, Ecolab. Okay, we'll go out to June, gives us a little over a month and a half, 50 days. So if I were at the money on a long call in ECL, let's just say, oh, that's pretty expensive, 875. I'll just save this trade for now. And then I want to make a pair. So I'll go long the strongest or one of the strongest and short one of the weakest. So FMC is definitely very weak, but it's been consolidating. I prefer something with a little bit more slope to it. So Newmont Gold, look at that. Just doing very nicely downward slope. Then it jumped up into the EMA 8 today. This is beautiful. This is perfect. So is a Mosaic, MOS. I'm kind of, let's go with Newmont NEM. Okay, so if I go to a long put and I also do at the money, then what I am pretty sure is that at the money strike in both cases will be somewhere between 40 and 50 on a delta, or probably closer to 45 or 50, depending on how far away we are from the actual strike. So we can actually might as well verify. So if I go to Newmont, out to April on the put, we've got a 34 delta because that's $31.25. That's kind of far away from that 30. So good thing I checked. 34 delta. We go to ECL. ECL, we have 224.84. And if we go out to 230, that's actually kind of far from 230 as well. So what's this delta? This delta is 39. So they have similar deltas. They're off by 0.05. So the ECL may be moving a little bit more, but they're similar enough where if I'm going in small size, I'm not going to be too worried about that. So what I would say is the previous one, we said if we only bought one, we'd be investing about $875. This one, if we buy one, we'd be investing about 97. I want them to be roughly equal, and then their relative performances to separate them apart if they are going to move in the same direction as each other. If they can continue to diverge, if ECL continues to go up and NEM continues to go down, so much the better. I make money on both of them very rapidly. But if the entire sector decides to go up and Newmont Gold goes up and ECL goes up, they both go up, then what will happen is that first dollar move will be roughly the same. I won't make or lose very much money on that at all. But that second dollar move, third dollar, fourth, fifth dollar move, I start to get more and more deviation between the NEM and the ECL, and I will make that money between that spread. And the opposite is true. If we start to go down, that first dollar move downwards, I will make slightly less money on the Newmont Gold than on the ECL because the 39 delta versus the 34 delta. And so I'll take a tiny baby loss on that first dollar move, but that second, third, fourth, fifth dollar move, I start to make more and more money. So that's how we put these pairs together. So we want to invest relative to their deltas the same, or I should say weighted by their delta. So technically I should say the cash invested multiplied by their delta. We want those two numbers to be the same. Practically speaking, that's going to be impossible because unless they have the exact same delta and we have the exact same option price. So there is always going to be a little bit of leakage, but that's okay. So $875 versus, say, if I put in 9 of these, then that would be a little under 900. That would be 9 times 327, it'd be $873. Actually, that'd be almost dollar for dollar. So let's pretend we do 9 of these. So 873 versus 875. And I'm going to say this is paired with ECL. Okay, I'll go back to my save trades and ECL, I will save this trade, and this is paired with Newmont. All right, so if we go into, I need to clean up our old ones that we didn't really track. So let's just delete this and delete this, and we'll track this over the next week or 2 weeks, however long it takes for us to start to see a little bit of separation. And when we decide that we're done with this particular pair, we can track on how well this does. So overall, our expectation should be that XLB, unless it breaks trend, will stay relatively strong and move upward. But so we'll make money on NEM, but maybe not make money on ECL. If the opposite becomes true, then we'll make money on ECL, but not on NEM. And then if this trend just holds, if everything just holds, if individually, I should say, each one holds its trend, then we'll make money on both of them at the same time. And that's the best case scenario for us. The very unlikely case is Newmont starts to break downwards and ECL starts to break upwards. There's no, or I'm sorry, the other way around, ECL comes down and there's no reason for us to believe that if ECL moves downward, that money is suddenly going to go into a gold miner. That's not really likely the case. So, and especially they're in the same sectors, but they're on very different materials. So they're not perfectly paired, but they are within the same sector and they do move fairly well with it. Newmont has been breaking away because it is more in the gold sector. So again, this isn't perfectly paired, but the chances of us losing on both at the same time is small. So this is still a good pair. So we'll watch that over the next week or two and see how well that particular pair does. That's probably the best I'm seeing in this market. Let's go back over here and just take a quick look at our sectors once more. And I don't expect their charts to have changed much over the last 2 days, because mostly we've been chopping sideways, although in XLB we continued higher. There might be a couple exceptions to that, but we wouldn't really expect anything wildly different. So SMH chopped sideways, XHB tiny bit higher, XLK chopping sideways, QQQ sideways, XLC sideways. So this is what really made us a lot more cautious yesterday, was when we saw all these the XLK, the SMC, the XLC chopping sideways, having that consolidation. And we're looking for signs now that this is distribution and that distribution is ending, and which would mean that they would start pulling downwards. So this is still making me very cautious to the upside, especially in the tech sectors, the tech-related sectors. Retail, a little bit sideways, S&P sideways, financials sideways, XLI a little bit up. So XLI and XLB are our sector pairs. They're very related to each other, and we expect them to be next to each other. And they're not, but they are moving in the same direction as each other, looking very similar to each other. So DIA sideways, XLY slightly up, surprisingly. Okay, so that XLY is still doing well. And then our defensive sector looks like it might be breaking out. It might be time to start paying attention to defensive sectors. XLV pulling back to its EMA 20, so we'll want to see if that holds. That's very interesting. If we get a bounce and a confirmation bar tomorrow or Monday, then we would be going long XLV again. So a lot of these are sideways, and some, very few of them are kind of moving a little bit higher. Let's take a quick look at ITA, and then that'll be it for today. So if we draw this horizontal line right here, we broke up above. You see that how many times we tested it over here, and then we tested it quite a few times over here. Yesterday we finally broke above it. We're coming back towards the EMA 8 and this breakout point to retest it. So tomorrow, what we would want to see is that it comes down and touches that line, either the EMA 8 or this purple line, doesn't really matter, and then starts to bounce upwards. And a confirmation would be it closes above this open on this red bar right here. That would be confirmation of the bounce, and we will be paying very close attention to ITA if that actually happens. Weakness, even though the indices are still up and in their uptrend, we are seeing weakness and having trouble breaking up that above this psychological resistance right here. So we're going to be cautious moving forward. We're still going to point our portfolios to the upside, but with smaller bias to the upside and with very judicious and selective choices in the sectors that we go in. So basically same thing as the last week. Nothing has changed that much, although we are honing in on the sectors that we prefer to be in a little bit more precisely. So that is it. We'll just keep on paying attention, we're going to pay attention to see if we break above or we break below, and we're just going to be ready whenever that happens. Okay, guys, thanks so much. Have a wonderful rest of your day. And again, I will not see you tomorrow morning or live in the afternoon because of the many things that I'm juggling at the moment, but I will record a video at some point, either after the markets tomorrow or over the weekend. Have a wonderful rest of your weekend. Wonderful day tomorrow, rest of your weekend, and I will see you on